And moving on the show. In the recent years, the private sector has been recognized as a key engine of Africa's economic development. And as a robust and vibrant private sector is vital for inclusive and sustained economic growth, the African economy is set for a boom as G7 countries, along with multilateral partners, have announced an $80 billion investment to invest in the private sector across the continent. These investments, set to roll out over the next 5 years, will support long-term development objectives of African economies, including those which have been negatively affected by the COVID-19 pandemic. It is the first time the G7 Development Finance Institutions, DFIs, have come together to make collective partnership and commitment to the African continent. These investments opportunities in Africa will be drawn from existing capital and focus on renewable power, infrastructure, manufacturing, agriculture, and technology sectors, as it will collectively provide clean, reliable power to millions of people, who give undeserved market better access to finance, and help create jobs and reduce poverty. To make more sense of this, and of course, what it means for Africa's most populous nation, I have joining me via Skype is the Fiscal Policy and African Tax Leader, PricewaterhouseCoopers, Mr. Taiwo Oyedele. Good afternoon, Mr. Oyedele. Thank you very much for your time.
Good afternoon, Tolu. Thank you for having me.
Very quickly, before I go into our focus of discourse, of course, I'm going to talk about this. Inflation is down. And some are saying this seems not to be at par with the reality on ground. How did this figure come to you yesterday? So many analysts are still, they still can't just put it together. How does it come to you, Mr. Oyedele?
Yeah, I'll say it was, it came as a pleasant surprise. So the moderation in inflation is a good thing for us, because I think now is the second month that we are seeing this moderation, even though it's very marginal, but I think it's good. But what people need to realize is when we say inflation has declined from a little over 18% to around 17.9, 17.8%, it does not mean, so the MBS is not saying the prices of goods and services have come down. They are saying that the prices of goods and services are in fact more expensive in May than it was in April, but that the rate of increase in prices less than before. So that's why people are saying they don't feel it. They're not meant to feel it that way. So prices are still rising, even in May, but at a lower pace than before. I think that's what it means. So essentially, the good news for me particularly was the moderation in food inflation, even though I was concerned about the increase in core inflation, because that is more systematic and structured than, the pass-through, food inflation that may be there 1 month and not be there again in the next couple of months.
I want to quickly follow up before we move very quickly. This World Bank is also saying that rising inflation could push about 7 million Nigerians below the poverty level line. This is also very worrisome, and I've seen a lot of arguments around this space when there's an argument that jobs are being created, and on the other hand, more people are being pushed into that poverty line. Does it have to do with our population and our growth rates? That argument that has always been on, Mr. Oyedele.
Yeah, I think maybe, I would say maybe the World Bank is even being conservative. If you think about the inflation we've had to contend with over the past, 1 year or to 18 months, and the fact that in addition to that, you're having rising population faster than the GDP growth rate. We had a recession last year as well. If you put all of this together, sometimes we forget that we are talking about real people, households. So what it means is many people are on the edge. So they just take little thing to rise by just 1 naira, and they can no longer afford the meal that they were affording before. Same thing for shelter, same thing for clothing. So I think that, my estimation would be that far more than 7 million Nigerians have been pushed into poverty because of inflation, because of the recession, because of the economic situation we have in the country, including insecurity.
Moving on now, G7 partners to invest $80 billion in Africa's private sector. Now, this is the first time the G7 development financial institutions are really coming together to make this collective commitment. Why Africa? What do you think is the interest?
Yeah, I think it's in the enlightened self-interest of the G7 and of course the rest of the world to try and help Africa, because if you have crisis in Africa, I don't see any continent that can contain that. Nigeria alone just being 200 million people. So it's investing in Africa is a more affordable way for them to try and prevent economic crisis. So of course they don't have to deal with, say, immigration. The experiences they've had in the recent past hasn't been palatable. So for them, I think they've just been proactive. So, but having said that, I would say it's a good thing. $80 billion over 5 years, not likely to transform Africa, but it will make an impact. What that means is that, if the policy environment is right, the environment for doing business, is less certain and less volatile, particularly the things that are within our control. The $80 billion is what Nigeria should be attracting in just 1 year. Singapore is barely a population of 3 local governments in Lagos State, and they attract average of FDI of more than $85 billion annually. Nigeria barely is able to do $3 billion, especially in the past couple of. So in any case, $80 billion in Africa over 5 years. It's a good thing. We need to think about how do we position our private sector organization to be able to leverage on this opportunity for investment, especially in critical areas of growth and development, including technology, infrastructure, and agriculture.
Now, moving on, I'm also looking at all of these agencies. We have like the World Bank International, AFDB, European Investment Bank for Reconstruction and Development. Of course, this will be a long-term, well, I don't know if it's going to come in form of loans or grants, but whichever way this help or this assistance is going to come, what do you also think about the risks involved? How well are they trying to mitigate against that?
Yeah, so I think certainly it will not be a grant because I think they were deliberate in the choice of word to say it would be investment.
Okay.
So this is not going to be different from what the likes of African Development Bank and even the IFC are already doing in Africa. So usually you want to invest in a way that you can get your money back. So this is not a grant. So they want to invest to at least get their money back. I think the attraction to the private sector in Africa would be that you hope to get terms that are more favorable than if you were to go to the market directly. If you want to raise Euro bond, apart from the fact that you need to try and pay a higher rate to attract investment, you also face the significant exposure to exchange risk. So this will not go away completely, but if you get good terms from these development finance institution coming together, it will give you maybe even longer terms to be able to invest in things like this. Of course, the risk in Africa is there, and this G7 DFI group are aware. They are aware of this risk. But what it also means that in relative terms, if they then find that the risk of investing in, say, infrastructure in Nigeria is higher than the risk of doing so in Kenya, they're likely to tend towards investing in Kenya. But then there's also the regional aspect to it, that if the private sector can initiate the process of collaboration and partnership across countries within Africa, especially leveraging on the Africa Continental Free Trade Area, they expect that if they have a proposition for this G7 DFI group that cuts across a number of countries, that will be more attractive and it will be fairly for them to want to invest. But overall, government needs to support the private sector to reduce the risk in the environment and these investments, whatever they may be, whether in agri, manufacturing, whether in technology or infrastructure.
Moving forward, we see almost all of this investments focusing many times on energy space, a little bit of energy, I think, trying to light up and, use renewables and clean energy and, of course, infrastructure and all of this. Now, how well do you see this helping bridge this unemployment gap, this wide gap that we face? 33.3% for unemployment rate. We have underemployment, all put together, not looking good at all. So do you see all of these moves helping address this practically?
Yeah, that's an excellent question, Tolu. So it's instructive to note that the G7 in their last meeting actually ended up with a lot of resolutions and decisions that they have made. And that includes the fact that they want to cut down the production of fuel and diesel consuming vehicles by 2030 because of the commitment to the environment and climate change around net zero towards 2030. So what that means is, on one hand, the G7, like the rest of the world, is concerned about the environment. So they don't want us to be using fossil fuel. They want to cut down on coal. And that for Nigeria is bad news, because it means that, maybe the risk of not getting money from our crude oil is even closer to us than we think. On the other hand, there's this promise of investment. And part of their focus is, can we invest in clean energy? So what that means is private sectors in Nigeria and across Africa need to be thinking about renewables, clean energy. What is it that you can use on one hand to attract this investment, but also to help you generate energy for the population and to continue to spur growth, given that the world is moving away from fossil fuel. So ultimately, I would imagine that renewable energy should be able to generate more employment than maybe crude oil, because crude oil really is, I think it's capital intensive, not labor intensive. But then if you think about solar panel, for example, you just process of doing the installation around alone is a lot of employment, in addition to the component, the maintenance, and all of that. So maybe overall, if we have a national strategy around it, it just might turn out to be a bad thing for the economy.
Recovery from COVID-19, the negative impact of this pandemic cannot be overemphasized. We know what's still happening in India and how that's even affecting our crude, talking about buying of our crude and all of this. So if we're looking at a kind of recovery with support of investments like this, coupled with the challenges still on ground, that's the reality that we have on ground, both in our country and globally. What kind of recovery are we now looking at from the effects of COVID-19? Because this investment is also to help countries being hit bad by COVID-19.
Yes. So part of the objectives of this proposed investment is to help with the recovery of the economies in Africa as a result of the crisis we have seen due to COVID-19. I don't think, though, that if you divide $80 billion by 5, that gives you $16 billion for 54 countries in Africa. I don't think that would move the needle in terms of helping us to recover. But of course, if you apply that, because every dollar of investment we can get is an advantage for Nigeria, it's an advantage for Africa. So I would say that it would be unwise for African governments and African people, including the private sector, to focus all their attention and place all their on these $80 billion. It will not be nearly enough to make an impact. But in addition to this 80 billion, maybe we can use that as a catalyst, and also to start thinking differently about the fiscal policy, monetary policy, the regulatory environment, and all these issues that, because again, I think around the world we have over $17 trillion of liquidity that attracts either negative returns or zero returns. So why are they not $80 billion even a drop in the ocean compared to what is available? So what can we do to start attracting this kind of investments on a scale that can really make an impact, and then we're having to deal with it in the area of unemployment in particular, which by extension is creating more poverty, inequality, and also inequality.
Now, the role of the private sector in its entirety is something that came to my mind while you were making your submission. Now, private sector definitely has to support government one way or the other, or government has to work hand in hand with the private sector to address all of these challenges. At the moment, how well what's your assessment of that handshake, that collaboration between the private sector and, of course, the other side? How well are they synergizing to help address all of these challenges that we face as a country?
Yeah, I think it's important to always remind ourselves that we have to work together. It is not government versus the people or versus the private sector. It has to be that we collaborate to try and address national challenges. The private sector has, my estimation, they really stood up, particularly if you think about what the private sector has been doing on COVID. The intervention they have made is very common. But because this is, we're going to ask for more. We want the private sector to contribute more. We want the high net worth individuals to do more. We want everybody of means and resources to help because we are in a crisis. So what that means, therefore, is government has to, open up and say we need help. The private sector also has to be willing to offer, to support. It's not everything that is about paying taxes and giving donation. Sometimes it's about making your resources available to help government with capacity around policies, around regulation, and so many other things. So I think it's the time for us that we need to work together, individuals, organizations, private sector, civil society, public sector, government, policymakers. Everyone has to work together in the interest of our country and for the future generation as well. So I'll say the private sector needs to do more, even though I'll say already what they have done is commendable.
So if we are to look at this kind of support and investment again, are we expecting more of this? And if we are, where might it be coming from?
Yes, if you look at the sources of our FDI, you find that some of the top countries where we get FDI from are also in the G7, such as the UK, even France, and also the US. So what that means is, if you leverage on this promise of $80 billion and use that to showcase what you're doing around clean energy, around infrastructure, around technology, what that would mean is you then attract the attention more investors in these G7 countries or even beyond. So they start getting the inflow of FDI. And there were times that Nigeria was getting, FDI in billions of dollars annually. So maybe this can spur the interest of the investing international community in Nigeria and in Africa. And as a result of this, we'll be able to get more investment. Because without investment, there cannot be development. And I'm mindful that the investment we are looking for is not only foreign, we also need domestic investment. So government has to pay attention to both the domestic investment and the foreign direct investment, including investments that the SMEs so much desire. And if you think about the technology sector in Nigeria, like fintech, like the likes of Paystack and Flutterwave. So these are people who have succeeded despite the difficult environment. You can imagine if we make the environment more friendly to investment, maybe we should be talking about 20, 30 of them and not 2 as of this time.
It's a good way to leave it there. Speaking with the fiscal policy and Africa tax leader of PricewaterhouseCoopers, Mr. Taiwo Edele. Thank you very much for spending your afternoon with us. We appreciate this.
Thank you for having me.